Hi, it's Bob Hoopshire, and this is the Gaining Perspective podcast, where we bring you insightful conversations with some of the top thought leaders in the investment advisor profession and investment management industry. I am the founder of Advisor Perspectives. BNY Mellon Investment Management recently launched its latest suite of thematic ETFs, including the BNY Mellon Innovators ETF. It is managed by John Porter, my guest today, and he joins us here to discuss that ETF and what it means to invest in innovation and why thematics. The BNY Mellon Innovators ETF was created to support innovation across a wide range of industries and sectors, not just technology. It invests in companies that can provide economic benefits, create new jobs, and improve the quality of life for people worldwide. John's broad definition of innovation is unique. We're going to hear about that. And we're here to discuss more about the strategy with him. John is the Chief Investment Officer and Head of Equity at Newton Investment Management, an investment firm of BNY Mellon Investment Management. It has $103 billion in assets as of the end of March. He is responsible for overseeing all equity strategies across market capitalization, and his team currently manages around $70 billion in equity strategies. So, John, tell me a little bit more about your career path, what led you to join Newton, and maybe a little bit more about your role there.
Absolutely. Thank you very much for having me, Bob. So, I have an engineering degree from the University of Michigan and an MBA from the University of Chicago. I started my career back in 1994 at Fidelity Investments, where I spent 15 years in various portfolio manager and research roles. This really has provided the framework for how I look at markets, which is from a very much a fundamental bottoms up basis. After I left Fidelity, I was the founder and chief investment officer of a small hedge fund called JP3 Capital Management, which I led for 3 years. Beginning in 2013, I was the president and chair of the investment committee at Seaward Management, which is an RIA based in Boston, now known as Prio Wealth. I joined Newton in 2016, and I've been there for almost 7 years now. My first director of research at Fidelity, actually, from the beginning of my career, was one of Newton's senior execs, and he recruited me to join the firm to manage our small cap growth strategies. Today, I manage all of the U.S. growth strategies from small cap to large cap. And in addition, as you mentioned, I've been the head of our equities business now for a little bit more than 4 years.
Great. So let's talk about thematic investing and why innovation. Why is now the right time to launch a thematic ETF focused on innovation?
Why now? Such an important question. Look, I'll start by making a statement. Our industry doesn't have a great track record of thoughtfully launching products that genuinely address client needs. There's been too much fad chasing and a focus on asset gathering rather than designing differentiated products that are great for clients. So, talking for a moment about what we mean by themes and why innovation. First, at a very high level, themes give us a blueprint for how the investment landscape is evolving. Investing is hard, everyone's crystal ball is pretty cloudy. We think themes help provide a bit more clarity to that crystal ball. Now, by identifying the key trends that are captured by themes early and investing in them over the long term, we believe that we can capitalize on the structural drivers of growth for our clients. And innovation is one of our key themes. When we look at the world today, the pace of innovation and disruption is accelerating at an unprecedented rate. Now is the time to take advantage of opportunities that have attractive growth potential in both established and new markets. We think, coming back to why this product now, we think in times of market volatility and uncertainty, we believe that entering the innovator space in this risk off environment is strategic, and it's a great opportunity because of the long term business opportunity. And we believe that the need for innovation is clear. Looking at Newton, we have a multidimensional research platform that provides us the unique ability to look at innovative companies and investments from different angles. This perspective comes from harnessing expertise that spans fundamental research, thematic insights, a strong ESG framework, quantitative resources, geopolitical analysis, an investigative research team, and private market research to help better inform our investment decisions.
So you mentioned the fact that the pace of innovation is accelerating rapidly. Why is that happening, particularly now in an environment this year where we're seeing much more market volatility. We're seeing the threat of a recession. Where is the opportunity that you're seeing?
Yeah, the short answer is that innovation and disruption is accelerating everywhere. There are risks and opportunities related to innovation in every corner of the market. Now, COVID may have accelerated some of these trends, and it frankly created a little bit of a boom bust cycle around innovation. But if you step back, innovation and disruption is reality that every business is grappling with today. Now, at Newton, we're bottoms up stock pickers. So we use this dramatic landscape as a framework to help identify where we're going to see attractive opportunities. For us as active investors, some of the areas where we're seeing particularly exciting opportunities include artificial intelligence and cloud computing, which is transforming the healthcare industry, increased data dependency across literally every sector of the economy, and an acceleration of digital adoption that has forced consumers to explore areas that they wouldn't have before. One simple example would be telehealth. Some industries and sectors that we're looking very closely at today include pet food, biotech, software, information technology, healthcare, consumer discretionary, and the fitness industries, just to name a few of the opportunities we're seeing around innovation.
You mentioned you're a bottom up stock picker. Walk me through how you evaluate a company, how you look at its management, its competitors, its balance sheet, its revenue forecast. What is your process for selecting and constructing selecting companies and then building the portfolio?
Yeah, Bob, all those items that you listed are so important. And I'll step back for a second. There's a well-known author named Simon Sinek. You may have heard of him. He's written, pretty popular books like Start with Why, Leaders Eat Last, and In the Infinite Game. I heard him once explain that innovation requires experimentation, and with experimentation often comes failure. When I'm looking at companies, when I'm looking at investment opportunities for this portfolio, an important test is whether the organization itself can tolerate failure. If it can't, then there's really no chance for that business to be innovative. So what we're specifically trying to do is we're trying to look around the corner. We're trying to identify those companies that can make a real lasting impact. We have a proven framework that we've executed for years around this strong thematic heritage to try and discern those opportunities where the growth potential is most significant. We call this the four M's, the four M's, the four measures that we're really looking at in these for these innovative companies are management teams, the market size, their business models, and the moat. This really shapes the holistic view we have of the opportunities we're trying to identify and the fundamental attributes that we're looking at to balance the risk and reward of these investment opportunities.
So when you talk about the management team, the market size, the business model, the moat, I mean that sounds to me like the traditional Ben Graham value investing approach. How does it differ? How does your implementation of that differ from your competitors?
Yes, at Newton, we think of innovation in a broader sense. Now, many innovation led funds focus on technological growth and have a very long term growth horizon. And for us, well, technology is a big part of the growth that we're focused on. The BNY Mellon Innovators ETF doesn't focus solely on technology companies or those looking to create necessarily amazing, brand new, groundbreaking products or services that drive innovation. We define innovation or innovation driven companies to be first those that leading edge companies that through intellectual property, through groundbreaking and innovative products and services can be really disruptive and transformative to existing business models and practices, really in any industry or sector. We're also looking for those business enterprises that are positively impacted by the transformation of their business models through leveraging the use of these products and services. So we see innovation as companies that really provide unique and differentiated efficiency to their customer base, whether it's on a small, medium, or large scale. The last point I would make is many innovation funds look out 10 years. And while Newton also looks at a long-term time horizon, our focus is more on a 2 to 3 year time horizon. We want to balance the optimism of companies that have amazing long-term potential with the reality of needing to see tangible progress over the next couple of years.
Let's pause for a couple of minutes for a word from our sponsor. I know that you already enjoy our content from advisor perspectives every day. So why not use our award winning articles, commentaries, and charts to streamline your communications with clients and prospects. My team and I introduced AP Premium last summer, and we've been blown away by the response from the advisor community. Keep listening for an exclusive code to get $10 off our premium service. You won't find the in depth, sophisticated market analysis and charts like Advisor Perspectives anywhere else. This information can be invaluable to help your clients understand complex topics. Let's say a client asks a question about their estate plan. Instead of spending time researching and drafting a long winded response, quickly grab any number of related articles from our library and share it in a personalized way. AP Premium gives you the power to add your logo and a personalized message to any piece of content and share it directly with your clients and prospects. We also introduced a premium offering called the Ask an Expert webinar series. At our inaugural session, we were joined by Wade Fowl for an intimate Q&A. Advisors have told me this is one of their favorite perks of being a premium member, and we can't wait to share who's slated to join us next. Give Premium a try and see for yourself why it pays to be a premium member. As always, we appreciate your support of our efforts to bring excellence to financial journalism. And as a thank you, I'm offering a one-time $10 discount for new premium members to be taken off your first monthly or annual payment. Just go to advisorperspectives.com/member. That's advisorperspectives.com/member and use the code podcast 2022. That's podcast 2022, all caps, at checkout. And now back to our podcast. So you're looking across sectors, you're looking for businesses that can really drive efficiency and achieve outperformance over a 2 to 3 year horizon. How does the ETF fit into Newton's broader investment vehicles and its capabilities? Is it an extension of work and things that you've already done?
Yes, the BNY Mellon Innovators ETF is a vehicle that's absolutely an expansion of the work that we've been doing in thematic investing for a very long time, and something that we believe Newton is quite well known for. We have a 30-year history of thematic investing. Really, we've been doing it since Newton's inception. And we believe this type of investing is very important, very significant in magnitude, and has a very long lasting impact on a successful investment process. For us, again, themes identify major areas of structural change in the market. Some of those changes can be political, some economic, some social, some technological. The impact is going to be quite significant across many traditional economic sectors, in our opinion.
Let's talk about the ETF itself. What benchmark does it track? How is its performance measured? How many positions will it hold? What do you expect the turnover to be?
Yeah, so the benchmark for this ETF is the Russell 3000 Growth Index. So it's a US focused index. The ETF is going to typically hold 30 to 50 stocks. It will fluctuate around there, but that should be sort of the center point. The ETF's brand new, so we don't have a portfolio turnover rate for this particular product as of yet. But as I mentioned at the beginning, I manage all the US growth strategies for Newton across the cap spectrum. I've done that for a number of years. So you can look at those portfolios and see that my portfolio turnover tends to be probably 40 to 50%, with the name turnover being less than that, probably around 25% or maybe slightly lower.
And I should make sure it's clear here that this is an actively managed ETF. It is not an ETF that will track an index. Uh, is it going to be 100% long US equities? And talk a little bit about your risk management discipline. You mentioned earlier that you will invest across sectors. How will you diversify across sectors, across industries?
Yes, this is a long only product and it's going to be fully invested. The ETF will invest principally in equity securities of these US based innovation driven companies. Given our bottoms up approach, the stock specific risk is really going to be the biggest risk factor for this portfolio. Risk will manifest itself primarily where we're frankly just wrong on our investment thesis. That's our focus. Our constant focus is really on the question of why do we own the security and constantly re-examining the thesis. Now, in thinking about other ways to look at risk present in the portfolio, there's certainly many other factors that we're going to constantly evaluate. Some of those would be, what the sector allocation is, both on a relative basis, absolute, but also looking at what the beta adjusted exposure is, because just saying you're 500 basis points overweight sector doesn't really reflect sort of how much sensitivity you might have to movements in that sector. Certainly, there's going to be a close scrutiny of the individual securities that have the biggest contributors to risk. So the concentration and position size of those bigger names are going to be a particular area of focus. And last, I would emphasize we have a lot of portfolio analytical tools at our disposal here at Newton. I do a periodic risk review with our quant team of all of my strategies to get their perspective on where they see risks in the strategies. One of the things that we do as fundamental investors is pay particular attention to those lagging stocks. So the stocks over the last, say, 1 and 3 months, they've really lagged behind the market are a particular area of focus. And then there's many daily performance analytics that we look at for this strategy.
So you're looking for stocks that have lagging performance. How else do you perform fundamental analysis before you decide to buy a stock? How are you looking at the price you pay relative to what you see as the intrinsic value of the stock to ensure that you're buying stocks that are relatively undervalued?
Certainly, every security has a fair value. Well, most of our time and attention is focused on the potential of the underlying business. You ask how we spend our time. Our analysts and myself spend a lot of time talking directly with companies, traveling to meet with the executive teams, meet with competitors, meet with participants in their supply chain, all the basic blocking and tackling that you would expect from a fundamental investor. So that's where most of our focus is. We're trying to figure out what the potential is for the underlying business. But you always have to do that against a backdrop of what's priced into the stock today. So we do assess valuation as part of the investment process and risk assessment, but it's just one of many list of factors that we consider. A lot of our focus would be, how much is the company investing in R&D? What do we see as the differentiators in their intellectual property portfolio? What's the real product or service differentiation? What's the protection around that? How well recognized are they in the industry, measured by sort of market share and market share growth? Issues like that are some of a long list of issues that we focus on.
And one more question here about the ETF. What will be its expense ratio?
Yeah, so as a 50 basis point management fee.
Okay. Stepping back here, where do you believe the biggest opportunities are in the equity market?
Yeah, so I'll start with the skepticism around innovation. I think is the biggest opportunity for those with a long-term time horizon. But I think we've covered that subject quite well so far in the conversation. I think focusing on a little bit of a shorter term time horizon, identifying opportunities in the market today is challenging. The investment backdrop for equities, I think, is quite mixed right now. If you ask me to look out over the next 6 months, I think the consequences of the aggressive Fed tightening have not been fully felt in the economy yet. The recent bank stress is going to lead to even tighter credit availability, which likely slows the economy further. When we talk to companies and we talk to CEOs and CFOs of major American companies every single day, corporate America is pretty cautious right now. We've seen them reduce the number of job openings, which can be a precursor to job cuts. CapEx cuts are looming in many industries. All of that, could be a headwind. So while I strongly believe that you shouldn't bet against innovation, I think that innovation is going to be the answer to many of the challenges that we face economically right now. I think you really have to be realistic about the current environment. Now, against that backdrop, focusing on some areas of opportunity, I think healthcare is the best part of the market to be overweight right now. Healthcare offers a great mix of reasonable valuation, defensible business models in this uncertain macro environment. And I would argue the strongest innovation story of any part of the market when you look out over the next several years.
I have one more question here related to innovation. Perhaps I should have asked this earlier, but I know that this is a question that will be on the minds of those who listen to this. Chat GPT, biggest topic now in the world of innovation. Where do you see that fitting into the investment landscape? Do you see any investment opportunities that will derive from ChatGPT and the related products that have come out from other vendors?
Absolutely, at some point there will be opportunities. I think Newton, just like virtually every other company in the United States and maybe globally, is trying to figure out ways that we can leverage Chat GPT. I will have to, put out just a dose of realism though when it comes to sort of Chat GPT. And one of my favorite quotes comes from Bill Gates, who was quoted long ago saying that, people always overestimate the amount of change that can happen in 2 years and underestimate the change that can happen in 10 years. I think Chat GPT and technologies like that are going to have a very significant impact on essentially every business in this country. Artificial intelligence is a tool that has been in development for a long period of time, and I think Chat GPT reflects sort of a major step function forward. And I think every business is going to be making decisions in a different way 5 years ago than they are today, but that change will come, in waves. And I think right now the market excitement about it is palpable, but I think there's bound to be some disappointments along the way that we need to be prepared for.
If there's one key takeaway that you would like to leave with our audience of advisors about how to find good investment opportunities that are based on innovation, what would that be?
Sure, innovation is happening in every corner of the economy, so I think it's important to take advantage of the volatility that we're seeing in the markets. The spike in rates, interest rates that we saw last year, caught many by surprise. But when I look at the landscape from a long-term time horizon, nothing has changed in terms of the business opportunity. In fact, arguably, what happened during COVID revealed the opportunity that embracing technology, embracing innovation can yield. So it's even more exciting today than it was 2 or 3 years ago to think about the potential around innovation. And I think it's important that investors try and take advantage of the market environment right now, which is filled with skepticism around some of these innovation opportunities, and capitalize on that short term skepticism, given the long term opportunity we've seen.
Well, we will include some links in the notes that accompany this podcast. There'll be at least a link to the Newton Investment Management website and maybe a link to some other resources that we can offer about your ETF. John, is there anything else you'd like to add?
No, Bob, this was great. Really enjoyed the conversation.
Well, you're welcome, and thank you for listening to the Gaining Perspective podcast with Bob Hoopshire, today featuring John Porter of Newton Investment Management. To support our podcast, please share, subscribe, or leave a review to help make our podcast more findable for your friends and colleagues. You can subscribe to Gaining Perspective on iTunes, Spotify, and Stitcher.